Thank you all. My name is David Whitting. I'm the Head of Property for Venture Crowd. I am a former lawyer for my sins, Director of Multiplex Developments, Queensland State Manager for Grocon, and Property Council Queensland Division Council Board Member with over 30 years' experience in large-scale property development. In this presentation, I'm going to give you an overview of Venture Crowd, the South East Queensland market, the Cumulus project, and the Carrara Secured Debt Fund on offer. Venture Crowd is a digital investment platform for alternative assets focused on four main verticals: venture capital, property development, private credit and managed funds. Our mission is to make high growth and high yielding private assets in those four verticals available to as many investors as possible by providing seamless digital access and relatively low minimum investment amounts. We also have 2 AFSLs. We now have over 78,000 registered members and over 4,500 certified wholesale investors who have invested over $330 million with us across a range of projects, including delivering venture exits of up to 295%, property returns of up to 40%, and over 30 million in income distributions across a range of fixed income funds. In our property business, our team identifies and secures development sites in high growth markets and then undertakes the process of everything from securing the relevant approvals, organising civil and dwelling construction, marketing and then sale of the completed dwellings. Currently, we have live projects in all of those phases of development. At each of those phases, we establish a new fund to invest in the relevant part of the capital stack. We go from equity through to preference equity or mezzanine, which this one is, debt and then first mortgage construction funding. From a returns perspective, at the equity stage, we've delivered returns of up to 40%. At the pref equity or mezz stage, our returns are currently 18 to 20%. And at the first mortgage stage, our returns are typically 9 to 12%. One aspect that makes our property business strong is that our investment thesis has been laser focused on the South East Queensland property market. Over the past 5 years, the region has been home to a number of the highest performing property locations in the country. Our thesis is backed by the big demographic megatrend happening in Australia at the moment. A net positive migration to the region comprising predominantly wealthy retirees, downsizers and families. The Queensland State Government's 25-26 budget announced a record-breaking $116.8 billion infrastructure program over the next 4 years leading up to the Olympics. That's the largest infrastructure program Queensland's ever seen and one of the highest per capita in the country. The objective is for generational change across housing, transport, energy and the Olympic legacy. Looking at the Gold Coast specifically, Michael Matusik, in a report only a month ago, identified 7 core criteria underpinning an upcycle. And the Gold Coast met every single one of those, namely population growth, employment growth, rising wages, supply shortage, undervalued housing, a balanced demographic mix and lifestyle appeal. Recently, the dire undersupply of land in the Gold Coast region was laid bare, with resale house listings sitting at only 4 months' supply and apartments and townhouses even worse at 3.6 months. Hutchies, our largest builder, is out of the Gold Coast market. Chairman Scott Hutchinson recently said the infrastructure and Olympic spend would pull trades out of the Gold Coast tower market, meaning many now in the market will not be built. All of this is why the Gold Coast was recently recorded as having the second highest median house price in Australia by Ray White, after Sydney, of course. We have very strong conviction on the SEQ growth story, which we believe will continue past the Olympics, so we have been locking in a pipeline of residential development projects across the region. Our projects in SEQ include a 314-lot residential subdivision in Glenvale near Toowoomba, oddly up the road from the Lockyer Valley, previously talked about, a 121 apartment co-living project in the Brisbane metro area, a 240 assisted living project on the Brisbane River, and a 46 luxury townhouse project in Albany Creek. All of these have performed extremely well from a capital growth perspective, and we expect they will continue to do so. But the project we're focusing on today is perhaps the most exciting for a number of reasons, so let me take you through it. Cumulus is a development of 59 luxury grand villas on a high ridge in Carrara on the Gold Coast, with views over the hinterland or to the Broadbeach skyline, which is only 8 minutes away by car. The entirety of the site is over 27 hectares, of which only some 3 hectares is developed. The remainder is being regenerated with walking tracks through native vegetation through our residents. The development also has a massive recreation area, including a 20-metre pool with barbecue and leisure facilities. This offer is something quite different to the usual townhome development of close packed houses looking into each other. No space, no views. Our project is certainly very, very special. Civil construction is now complete with all roads and services in. With experienced builder DevCon on site, construction of the houses has commenced, with screw piles being drilled in as we speak. Completion of the first stage is expected by the end of next year. 6 of the villas are 3-bedders, with the remainder being 4s, with some of them having 2 master bedrooms, 1 up and 1 down, allowing for separated disability or intergenerational living. Our prices range between $1.5 to just over $2 million, and with revenues averaging about $7,200 a metre, they're only half of new non-beachfront apartments and a quarter of equivalently sized beachfront apartments. In other words, there's much more room for further revenue growth. The marketing collateral is underway, as you see, will be complete by the end of August. Our first mortgage funder, JVL, has high confidence in the product and market, and we are not required to make pre-sales as a condition of the funding. Nevertheless, we do already have 3 contracts. In this project, it's Venture Crowd's profit that is at first risk. Gross profit on current revenues post-debt is forecast at a little over $15 million. All major costs, including the build, are locked in, and we will look to take advantage of expected revenue rises during construction, like our other projects such as Glenvale, where we've been able to push prices up by over 30% in 18 months, and our Albany Creek townhomes by over 16%, or over $150,000 per 3-bed townhouse in an even shorter timeframe. In other words, more room for revenue growth. From an investment perspective, this equity fund for the project closed oversubscribed in just a few weeks. The first mortgage construction funding is also in place until the end of the project. The fund we're raising for now will provide mezzanine debt in the project secured by a second mortgage over the property, targeting a return of 20% per annum, with repayments expected to commence some 15 months from investment from the balance proceeds of Stage 1 sales revenue. We'll be releasing the fund for investment in tranches with a first tranche of $3 million and a minimum investment of $10,000. The fund is the final opportunity for investors to have exposure to the project. It will open for investment on the 17th of August, with allocations being made on a first-come, first-served basis. Until then, we're taking expressions of interest. If you'd like more information on the project or in the fund, you can use this QR code you see on the screen to register your interest, and one of the team will be in touch. Also, myself and a number of the other Venture Crowd team members will be at the Venture Crowd booth for the rest of the day and tomorrow. Feel free to drop by and have a chat, whether you're interested in property or whether you're a founder. Thanks very much, and enjoy the rest of the conference.